You got through the doubleheader. And really, you know what really was the market mover yesterday was not CPI. Because when I was on with you yesterday, the dollar was coming back. Gold was actually lower on the day. And what really lit it up were retail sales being flat. So you put the PPI, CPI, and retail sales together, looks like a soft patch. Inflation is ebbing. Stock market made new all-time highs. When I was on with you yesterday, I was talking about booking some profits. The dollar was recovering at that time. But so far we've held this 380, didn't even get down there. The low's been about 104. So this is what I'd recommend is, now you look to be a buyer on a pullback. To me, that's anywhere around the 108 level, maybe even start at 820 to 780 and, risk this low under, what is this low? 720, find an area. This was a pretty big, important low at 724. This was done last week, or maybe this was the CPI. Anyway, the point is we're not going to be buying the dollar on breaks. Okay, we're just going to be sitting here and waiting for rips to sell into. So here's your levels in euro, 820 to 780. Once we got through this confluence of converging moving averages, that was the close to buy, although it was in front of news. If it had been hot, and it would have been the other way, right? We'd be down here looking for buying opportunities. So, kept you long. You didn't add on this week, but kept you long from, when we were buying the pound at that 124.5 level right here last week. It's a big trade. It's 250 pips. So pound, we'll see what happens here on pullbacks, maybe around 125.70 or so. Should hold in here. And the Dixie, I'm thinking up here around 105, as close to 105 as possible. And then you could have tight stops if you want right over this high. That's 570. We start taking out this high, we're going to challenge this double top, and there's something else going on. But and there are some people talking $108, which would fly in the face of what happened in yields yesterday. And yields are bouncing back again, bouncing back with the dollar, and held right where it had to. Look at that 200-day moving average. So, they're very similar charts, although the dollar looks weaker than yields. So we'll see. I think this is important, and we could rally, but next time through these levels at 432, I think that you're looking at under 4%. Okay, basically on the measured move. And then I thought I'd do a quick tutorial on TLT. So you guys know I was talking about this throwover in TLT for a while. I was talking to Mike about TLT, that after we did this, you have to buy any break. And this is how you trade throwovers. You let it trade underneath the wedge line. You can't do anything about it. And your green light and your go signal is the first day back inside the formation. On a 4-hour chart, you might have gotten a little bit of a lead before this day right here. And even if you miss this day, you're still buying it pretty good in the 89 range for a nice little rally. We're going to pull back here too. We'll see if we hold this breakout at 92. But I believe this is now 1, 2, 3, and this is 4 and 5. So I think the lows are in, just like I think the top is in the dollar. But that's your tutorial. When you have throwovers on wedges, same for rising wedges, only the opposite. This is your go signal right here. Nice trade. You had your stops under the recent low. Worked out pretty good. We're getting a nice pop in WTI today with some divergence down here. But the sleeper, when the dollar was turning and people were saying, well, yeah, that's good for gold and silver. Well, yes, we know that. Um, they have a lot of sponsorship. There's a lot of bulls out here. I said I was looking for overlooked commodities, and nat gas was one of them. People were afraid to buy it. Look at that. Nice formation. Headed back down, back up towards this breakout at 3. Really a big move. And the other overlooked group was the grains, and they're acting okay as well. Uh, buy corrections, buy pullbacks here, buy pullbacks here, risk the recent lows. Corn, same situation, buy pullbacks here, contained by the 200-day. So get your fibs out and do your fibs from here to here for pullbacks. Do the same with wheat. Do your fibs from here to $7 and come up with 50%, 61.8% retracements. Maybe these pull back with the dollar pop. I believe that's mostly what I wanted to cover was the dollar and yields. Of course, S&Ps are making new highs. I was wrong. Yeah, newsflash. Thought that we were going to have a failing rally in here. But just one thing, even though I think there's probably, another couple of hundred handles left, maybe, Super Bulls. And, remember, 6,100 is a target off the 48 breakout. So I thought we, was there for this, called the rally, but didn't think that we were going to make new highs. So tried to sell a failing rally. I thought we'd pull back to 48 first. So we're in melt up territory, but I just want to show you something. Look at this weekly at new highs. Look at the divergence. I mean, I knew eventually we'd make new highs. I wasn't calling for a crash. I was just looking for A, B, C. But now we're making new highs and diverging there. Even worse in NASDAQ. Let's see the Dow. Even worse in the Dow. So Dow's not even at new highs yet. So it's still the laggard. What I'll be looking for going forward, if my narrative is correct about lower yields and a lower dollar, which should be a tailwind for risk, everything, commodities, stocks, everything, bonds. Maybe there'll be some exceptions, but in general, a weaker dollar, if you get the dollar right, you can usually get most everything else right. So to me right now, it's risk on. And lower yield should help propel risk, making what were stretch valuations look cheaper, especially if I get the decline in yields I'm looking for. So that's jet fuel. So even though the economy is weakening, what the financial assets become more valuable as yields drop, and the dollar weakening adds upward pressure on prices just in a nominal sense. So what I'll be looking for down the line is when the dollar is weak and yields are soft and the market isn't making hay with that going on. And that could be June, July, August, I don't know when. Some people are looking for a top in June, 5,500. The Super Bulls are still at 61. And of course, David is at 7,000. So, that's really still hard to imagine 7,000, but not as hard. 6,000, I was able to imagine that with the breakout from 34 to 3450 to 48, you tack on 1400, 61, 62. So I'll be looking for a phase when tailwinds are not supporting price. And, I have some candidates because even with a strong market, last week I was talking about selling Amazon, which was diverging up here on the 4 hour, right? and was diverging on the daily, and it's trying to rally. Maybe we're going to get a 3 drive to a top. And you know what? I was looking at this Apple on the weekly, and you guys know I was bearish forever, but I got out right in here. Then I thought I missed it, and now look at it. What we could end up with in June, July, is a 3 drive to a top formation in Apple, make another new high over 200. We'll see what the setup is, but that looks like where it's going now. So all that buyback money, and they'll have some kind of announcement in June, probably do some AI stuff, but mainly they financialize their stock with big buybacks at the last earning report. So let's see, we'll probably get a third drive to a top. It's going to be not a quiet summer in my view. Maybe August is, but let's face it, we have the most contentious and unstable presidential election maybe since Lincoln. You know, that's was quite a while ago, 160 years ago. So there's going to be, you're going to have to stay on your toes this summer, not just, get flat. That's okay. You can do that too, but you can't just sit with open positions and lay by the pool all summer. There's going to be plenty of movement. Volatility should start increasing second half of the year. So that's it. I may see you tomorrow. I'll be off next week. I'm going to take a little break. So the takeaway is continue to sell rallies in the Dixie and buy breaks in Aussie and cable. Euro, maybe we'll get the interest rate cut that by ECB. That I think that would be a break to buy. And trade the bonds from the long side, buy this pullback, stay with the grains and buy pullbacks there. I'm just leaving equities alone for a while, and I'll be back after Memorial Day. So good hunting. Hope I'm helping you guys out. And some of the calls work, some of them don't. But, you know, I'm just calling them as I see them. And, the biggest, best traders in the world are wrong. And at times say, I don't know. So it's wisdom and transparency. It's wisdom to say you don't know. So there are a few things that are fitting the narrative. Good luck, good hunting. And remember that you're some of the fortunate people that have discretionary capital to put at risk when you see something compelling, unlike a lot of others that just basic necessities are difficult to come by. So that's a wrap for me, everyone. See you in the room. Mike's busy. Mike came in long Walmart. He's been pounding the table on Walmart. Earnings beat. I don't know if they did buy the rumor, sell the fact, but he's busy today, and that's why I'm going solo today. Let me see Walmart. I know it gapped higher. It's still higher. Nice call, Mike Venezia. Look at that. So I'm sure he saw some option flow. That's why it's important for you guys to be in the room. And I should be in there more often too, because those option sweeps and Mike's eye and what Alexis posts and everything really, keeps you in tune with stuff that's happening. Mike is very good. So here's another example. Pounding the table on Walmart, up 7%. So that's a wrap, everyone. See you in the room. And remember, don't just count your pips, count your blessings. And I'll see you down the road. See you in a week. Adios.